Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 16th of March. So the coronavirus continued to grip Europe over the weekend. We've had more countries now locking down. It's also continued to spread over America as well, and that's prompted the Federal Reserve to reduce interest rates by 100 basis points, bringing the benchmark down to just above zero. And this is on the back of a 50 basis point cut only a couple of weeks ago. So huge moves by the Fed. They're also instigated a quantitative easing plan to the tune of $700 billion US. These are huge moves that we've not seen in history with the Fed in the past. So is this going to have a massive impact on the markets? Really remains to be seen. It did create quite a lot of volatility from the markets over the course of the Sunday evening when the markets opened. So let's take a look at a few markets here that we're keeping a close eye on in the trading room at the beginning of this week. So if we come first of all to the Dow here opened last night in the Globex session, and it promptly locked limit down. I think it's about sort of 15 minutes later it locked limit down. So at the moment the market is locked, but if we come up to the higher time frames, we can sort of take a look at what we might look to expect for this market once it does open back up again. Now we can see from the bigger picture here, and we have to come up to the monthly chart here to see the huge moves that we've had over 2 months here. Well, these past 2 months, as you can see, the current month, obviously we're still halfway through this, but 1.5 months, we've now retraced the same sort of distance that we moved, the market moved here in the financial crash in 2008 to 2009. So we've had a huge amount of movement in a relatively short amount of time. Now we spoke about this 21.50 level a number of times, and the market has respected that level several times, particularly in intraday price action. It's been sort of quite a key price point. At the moment, the market is sitting above that level at the moment. Having said that, after the huge sell-off that we saw last night once the markets opened, and the prospect of little more good news coming out over the foreseeable sort of near-term future, it's hard to see that the market is likely to find some support here. So I'm certainly looking, if the 21.50 level gets taken out again, I'm looking for these recent lows down here to around just above that sort of 20 level here to be near-term target levels. Below that, I do think that we could be seeing a much sort of deeper retracement on this. It could be much further than the drop that we saw in the financial crash. Now, considering analysis on the Great Depression and the declines that we saw in stock markets there, seeing something back into this sort of $18 level, possibly sort of $17.50, as you can see, as a bit of structure here, could be sort of areas where we could be sort of testing fairly soon. These levels obviously bring the index close to a 50% retracement in the whole context of the value that the market was near the highs. So that represents sort of something that I think the market may well be starting to aim towards, particularly considering that there's unlikely to be a sea change from the bad news flow that we have with this illness at the moment. So more downside to come for US indices is what I'm sort of looking at here. If we take a look at precious metals and take a look at gold, gold again has and precious metals across the board has really sort of suffered. And if we take a look at this again on the monthly chart, you can see that the 1580 level, which is a level we've spoken about many times before, it's been very useful for trading opportunities. But just taking a look at this from the bigger picture, you can see that the market now, after late last week retesting 1850, rejecting off that and now moving fairly swiftly to the short side. Looking at the technical structure here on the monthly chart as well, we can see that we've got some fairly serious rejections of the higher level here around 160, 168. So I'm certainly looking at sort of weaker prices here on gold, certainly in the near term. I think we could be seeing, if we take a look at this area around where the market is at the moment, so around this sort of 1,530 area, underneath there, I think we could see sort of 14.75 sort of fairly easily. If the market does get underneath 14.75, then we could be seeing sort of much sort of deeper retracements, sort of possibly into this sort of 114.30 in the near term. So I'm looking at weaker prices here on the sort of precious metal markets as well. Now, coming to the Forex markets, the challenge really with the Forex markets is finding markets where we've got some fairly sort of clean structure. Markets have moved such a long way from recent sort of price action that there's little structure left in the charts for technical traders. One that I think is rather reasonable here is the Kiwi against the yen. The yen's obviously benefiting very much at the moment with being very strong as a safe haven market. We're seeing weakness in the Kiwi as well, and you can see long-term weakness in the Kiwi against this market. You can see this from the higher time frame trends. Now, last week we had this big move to the short side here, testing lows. Again, looking at this, I think if the market sort of takes out this sort of lower level, and probably more easier to see this on the daily time frame, if it takes out sort of last week's lows where the market sort of tested a number of times, then I'm going to be looking for a sort of a move down here towards that last week's low, which sort of brings it down to around that sort of 61,300 price point. So that's the sort of move that I'm looking for there on the Kiwi yen. Again, it's supportive of the correlations that we see in the US index markets, and of course the liquidation that we're seeing in gold at the moment as well. So there's a few markets there that we're keeping a close eye on in the trading room going into the beginning of this week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.